Welcome to the Deep Dive. Ready to explore exchange rates and the international monetary system?
Sounds complex, right?
It can be, but don't worry, we'll break it down. Why does it even matter?
Well, exchange rates impact so much. Think about it. Almost everything in our globalized world.
Exactly. From your daily coffee
to how businesses succeed internationally.
We've got a great mix of sources for this deep dive.
We do.
Academic notes, a business textbook chapter, and a case study.
On China's yuan.
Yeah. By the end, you'll really get how exchange rates work.
Not just the theory either, the real-world impact.
Things like, I don't know.
The price of those imported goodies you love.
Your travel plans, maybe even
investments.
It all ties back to this.
It does.
So let's start at the core.
The foreign exchange market.
Forex, right.
Yeah, Forex. It's where currencies are traded.
Like stocks or something.
More like commodities, actually. Think of it as a giant global marketplace.
I can barely imagine.
Trillions of dollars changing hands every day. Back in 2019, daily volume was 6.6 trillion US dollars. Staggering, right?
Makes you realize how huge and unpredictable it is.
Exactly.
But what makes these rates go up and down like a roller coaster? I mean, there must be a reason.
Lots of factors, actually. A basic one is the price difference between countries.
How do you even measure that?
Well, there's this fun illustration, the Big Mac Index.
Wait, the burger?
Yeah. It compares Big Mac prices around the world.
How does that tell us about currencies?
It's about purchasing power parity. If a Big Mac's way pricier in one country,
it could mean their currency's overvalued.
Exactly. If it's much cheaper.
Undervalued, maybe.
Right, but it's just one piece of the puzzle.
Okay, so what else is at play here?
Inflation and money supply are biggies. High inflation weakens a currency.
Because if your money buys less at home?
You'll probably buy less abroad, too.
What about those interest rates everyone talks about?
Huge factor. Higher rates often attract foreign investment.
So, more demand for that country's currency.
Which strengthens it. It's this constant financial tug of war.
Feels like more than just economics, though.
You're right. Global events matter.
Like, 2008.
The financial crisis, yeah, sent investors scrambling for safe haven currencies.
That bandwagon effect you hear about.
Exactly. Investor psychology can really shake things up.
It all sounds a bit overwhelming, if I'm honest. All this fluctuation must be tough for businesses, right?
It creates what we call currency risk.
So there are different types of this risk.
Transaction, translation, and economic exposure. We'll dig deeper later.
But the gist is
potential losses due to those changing rates.
So how do businesses handle this? They can't just cross their fingers and hope for the best?
They use strategies, one being hedging.
Like insurance for your money.
Good way to put it. Financial instruments like forward contracts come into play.
So locking in an exchange rate for future transactions.
Exactly, protecting against potential losses.
That's smart. But wouldn't a company lose out if the rate moves in their favor?
True, hedging isn't about perfectly timing the market.
It's more about reducing risk.
Predictability for your business. Peace of mind.
Gotcha. Any other hedging tools out there?
You've got currency swaps, options, each suited for different scenarios.
So, working with finance teams to figure out the best approach.
That's key. But we also mentioned leading and lagging.
Right, timing your payments strategically.
Exactly. Delaying payments if you think a currency will weaken.
Or speeding them up if you think it'll strengthen. Clever.
It takes market knowledge, though.
Definitely not for beginners, it seems. But before we get too practical,
should we look at how this system even came about?
How did we get here?
It's been quite the journey. Started with the gold standard in the 1870s.
Everything pegged to gold. Simple enough.
But it had its limits. Couldn't keep up with the growing global economy.
So what happened?
Well, after World War II, leaders came together. The Bretton Woods Agreement in 1944.
That's where the IMF and World Bank came from, right?
You got it. Bretton Woods aimed for more stability. The US dollar became the world's reserve currency, pegged to gold, other currencies fixed to the dollar, and the IMF and World Bank were born.
So the IMF kind of kept things in check, and the World Bank helped countries rebuild.
That's the gist. This system worked for a couple of decades, but by the late 1960s...
trouble in paradise.
The U.S. was facing pressure, inflation rising, trade weakening.
This led to...
the collapse of Bretton Woods in 1971. The U.S. dropped the gold standard.
A major turning point for sure.
It was. We shifted towards floating exchange rates, pretty much what we have now.
More flexible.
But also way more volatile.
I bet managing currencies in this new world is a headache for governments.
It's a balancing act. Some go with floating rates, letting the market decide.
Others prefer fixed rates, pegged to, say, the dollar or euro.
And then you've got the Eurozone with its common currency.
Each approach has its pros and cons, I imagine.
Definitely depends on a country's goals and situation. But one institution always looms large.
The IMF.
The IMF. They try to keep things stable globally.
We talked about their crisis response, but there's more to it, right?
Absolutely. They monitor the world economy like a watchdog, spotting risks, advocating for good policies.
Constantly analyzing, trying to prevent things from blowing up, I guess.
Exactly. They set international standards, too, for things like financial regulations and transparency.
All sounds incredibly complicated, especially these days.
It is. One big challenge for the IMF is how global power's shifting.
Meaning?
Their voting power is still based on the post-World War II world.
So the US and Europe still have a lot of sway.
But emerging markets like China and India are way more influential now.
They need to update things, I guess.
There are calls for reform. Another challenge is how complex financial risks are becoming.
Things like cyber attacks and climate change.
Big ones, yeah. They could devastate the global economy.
The IMF's work is getting tied up with these broader issues then.
Exactly. It's not just economics anymore. It's political stability, tech, and even the environment.
Wow, so we've covered a lot, from the Forex market to the IMF.
We have.
But before we jump into how this all affects businesses,
a real-world example would be helpful.
I agree. Our sources point to China's yuan between 2015 and 2017. Why those years?
A lot happened then, made it a really interesting case study.
Well, let's dive in then.
Let's do it. Welcome back. We're getting into the nitty-gritty now, how exchange rates actually affect businesses.
Yeah, we've talked theory, but what about real-world stuff?
Imagine being a manager at a global company.
So many moving parts.
Every decision, from sourcing to pricing, it's all tied to these exchange rates.
You really have to pay attention to the details?
Absolutely. Even small changes can impact your profits.
How so?
Let's say you're importing goods and suddenly the supplier's currency gets stronger.
Your costs just went up.
Eating into your margins.
Makes sense. So managing this currency risk is crucial. We talked about hedging, right?
Yeah, let's break that down a bit.
Like, walk me through an example.
Okay, you're a U.S. company. Got to pay a European supplier in euros 3 months from now.
What do you do?
Use a forward contract. Lock in today's exchange rate for that future payment.
So if the euro goes up, you're protected.
Exactly. But what if the euro weakens?
Wouldn't you have been better off waiting?
True, but hedging isn't about being a fortune teller.
More about reducing risk, I see.
Predictability. Budgeting becomes easier.
Like that insurance analogy again.
Makes sense, right?
Are there other hedging tools besides these contracts?
Oh, yeah. Currency swaps, options, those are popular too.
Each with its own quirks.
You need to figure out what fits your specific situation.
Work with the finance folks, I guess.
For sure. But remember, leading and lagging, we touched on that.
Yeah, playing with payment timing.
Exactly. If you think a currency is going to drop, delay your payment.
So you end up paying less.
Conversely, if you think it'll rise, get those payments in quickly.
Smart, but tricky.
Needs a good grasp of the market.
Definitely. But we've been focusing on single transactions. What about the big picture impact?
That's translation exposure.
How exchange rates mess with your financial statements.
Yeah, lots of companies have assets and earnings in different currencies.
When they combine their reports.
Got to translate everything into one currency.
Leading to potential gains or losses.
Just on paper, though.
Right, not actual cash flow.
Uh-huh.
But still affects how the company looks.
Exactly. And hedging might not help much here.
This is about long-term stuff, not just one-off transactions.
Exactly. So how do companies handle this translation risk?
I'm all ears.
It's more strategic. Look at the overall mix of currencies you hold.
So if you have a lot of euro debt,
try to get some euro assets to balance it out.
So you're less vulnerable to euro fluctuations.
You got it. It's about diversification.
And then there's economic exposure, the big scary one.
The long-term impact on a company's earnings.
Not just about one deal, but how the whole game changes.
Exactly. Think about a company whose main market's currency is weakening.
Their products become pricier for those customers.
Sales could drop, profits shrink.
And it's harder to compete with rivals whose currencies are strong.
That's economic exposure in action.
So managing this is less about financial tricks and more about adapting.
Exactly. You might change pricing, find new suppliers.
Even move your factories.
Big decisions, long-term stuff.
This sounds like you need a crystal ball almost.
More like a really good understanding of global trends.
And the guts to make tough choices.
For sure. But hey, it's not all doom and gloom.
There are upsides to all this.
If you're smart, yeah. Say your home currency weakens.
Makes your exports cheaper.
You become more competitive globally.
Opportunity knocks, but you got to be ready.
Absolutely. But there's one more player in all this.
Who's that?
Governments. They get involved too.
How so?
They might try to control things like limiting currency trading.
Or pegging their currency to another one.
Exactly. These moves can really impact businesses.
So it's not just the market, it's the rules of the game changing too.
It's complex, for sure.
What advice would you give to someone trying to navigate all this?
Stay informed, read the news, watch economic data,
Find good advisors who know their stuff.
and be flexible. Things change fast.
That's international finance for you.
In a nutshell, it's not just about the numbers, it's about understanding the whole global picture.
We talked a lot about the challenges, but there's still more to uncover.
Especially those big institutions, the ones shaping the system.
The IMF and all that.
That's where we're headed next.
Sounds good. Back again for the final part of our deep dive. We've covered a lot of ground, but we can't wrap things up without talking about the big players, right?
You're right, those institutions that shaped this whole system.
The IMF, specifically. It's come up a few times already, but can we just remind ourselves what it's all about?
Sure. The IMF, the International Monetary Fund, it's a global organization. About 190 countries are members.
Well, almost everyone.
Yeah, pretty much. Their main goal is promoting international monetary cooperation, helping to keep things stable financially.
So they step in when countries are in trouble, right?
You could say that. They offer loans to countries facing crises, balance of payments issues, things like that.
We did mention some criticisms, though, right? About those loans.
Yeah, there have been concerns.
Something about austerity measures being imposed.
Right. Some say the conditions attached to the loans can be too harsh.
So has the IMF done anything to address that?
They have. They're trying to be more flexible, consider each country's situation more carefully.
Finding that balance between stability and actually helping countries grow.
Exactly. But it's not just about crisis response.
Right. There's more to it.
They're also like a watchdog for the global economy.
Watching for trouble, basically.
Yeah, monitoring things, assessing risks, suggesting policies that'll keep things running smoothly.
So they're constantly analyzing data, trying to predict problems before they get out of hand.
Exactly. They also work on setting global standards for things like financial regulation, making sure everyone's playing by the rules, being transparent.
All of that sounds like a huge job, especially these days.
It is. The world's changing so fast. One big challenge for the IMF is how global power is shifting.
You mean who have the most influence?
Yeah, their voting structure, it's still based on the way things were after World War II.
So the U.S. and Europe still call a lot of the shots.
But now you have these emerging markets, China, India, they have a lot more economic power now.
So the system needs to catch up.
There are definitely people pushing for reform. On top of that, the risks they have to deal with are getting more complicated too.
Cybersecurity, I bet that's a big one.
Huge. And then there's climate change.
Yeah, that could really disrupt things.
Absolutely. These are just a couple of examples, but they highlight how interconnected everything is.
Financial stability isn't just about money anymore. It's about politics, technology, the environment, everything.
You got it.
Well, this has been a fascinating look into the world of exchange rates and the international monetary system. But before we go, gotta leave our listeners with something to think about, something to ponder.
Okay, how about this? With all these cryptocurrencies popping up and blockchain getting more popular, how do you think the international monetary system will change in the next few decades even?
That's a good one. Will we be using Bitcoin to buy our coffee someday? Or will something completely new come along?
It's hard to say for sure, but things are definitely going to keep changing.
We hope this deep dive has given you a better understanding of all this. Even though it can seem complex, it really affects everyone. So stay curious, stay informed, and keep learning.
Absolutely. The world of finance is always evolving. The more you understand, the better you'll be able to navigate it all.
Thanks for joining us on the deep dive.